What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so don't miss future videos. We are at 11,000 subscribers. I have a high yield dividend stock that many people requested. I actually used to own this one and then sold it. I'll explain to you why, but it's now back on my radar. So this is a very interesting dividend stock, and it's pretty cheap right now. So a lot of people are getting some attention or giving some attention to this high yield dividend stock. So that's one thing that I'm still closely studying. I mean, sometimes I buy stocks and sell them because I was turned off, and then I rebuy. So this is one that I'm looking at again. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Smash that like button. Let's check this stock out right now. That stock is PennyMac Mortgage Investment Trust, PMT. Previous close was 13.20. It's sitting at 13.11. It opened up at 13.20. Its day range is 13.02 to 13.20, and as you can tell, it has a cash dividend of 40 cents. We'll get into that in a little bit. 52-week range was 10.78 to 18.67. Market cap is 1.165 billion. The beta is 1.25. Now, the PE ratio is not available on a lot of websites. We'll go over that shortly. Dividend yield is 11.99%. So that's one thing that we need to look into. So right here, 40 times or 0.4, okay, times 4, get 160. So 40, 80, 120, 160. Let's go over these guys as a company. So as you see, PennyMac Mortgage Investment Trust is a specialty finance company that invests primarily in residential mortgage loans and mortgage-related assets. As a real estate investment trust, a REIT, their objective is to provide attractive risk-adjusted returns to shareholders over the long term, primarily through dividends and secondary through capital appreciation. Their investment focus is on mortgage-related assets that they create through their industry-leading correspondent production activities, including mortgage servicing rights. In correspondent production, they acquire, pool, and secure or sell newly prime credit quality loans. So here's the thing, okay? These guys are pretty much a mortgage-backed real estate investment trust. So we need to look a little bit more into these guys. So right here, their market capitalization is 1.8 billion and 2.5 billion in shareholders' equity. Focuses on risk management throughout PMT's more than 12-year history. They're an efficient investor in residential mortgage-related assets, 13.9 billion in total assets. Investment on credit risk on PMT's high-quality loan production. Current investment focus is correspondent production MSRs, track record of successful active capital management, and infrastructure for new products. So right here, best in operating platform, market capitalization 3.8 billion. Subsidiaries are PennyMac Loan Services, LLC, their mortgage production and servicing businesses. Holder of required state and local licenses and agency approvals. They're SEC registered and investment advisor. Net AUM is 2.0 billion. So this is, again, a real estate investment trust focused on the mortgage-backed real estate business. So it's an mREIT. So a lot of mREITs you got to be careful with. So this is why I'm closely observing these guys to see if there's any potential for me rebuying them. Again, I sold them, but again, I may rebuy them. So this is why I'm looking at them. And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. And you guys requested for me to do videos on these guys. A lot of you guys have, to see what I think of this one. So I'm going to let you know how it looks from my standpoint and the pros and cons. Now let's check out the revenue. Now the important thing to realize is these guys, FFO and AFFO is more important. So I'm going to go over just the revenue trends of these guys. So 2015, this is in millions US dollars, 373, 2016, 421, 2017, 469, 2018, 526, 2019, 786, 2020, 740, and then 2021, 725. Let's go a little bit more in depth with these guys. Now, again, their price per share is at 1309. So at one point, they were beating the S&P. And they're trying to rebound. So they were doing pretty well before the pandemic hit. So that's one thing that is somewhat attractive on these guys. So we need to look at a few things. So December 2021, their revenue was 221.21 million. This is quarterly, okay? That was down 18.36%. The net income was down 120.37%. It was down to 16.89 million. Then March, it was down 221.88 million. The revenue was down by 188%. June 2022, the revenue was down 112.28 million. So it went down 126.67. Then the revenue in September 2022 was at 84.09 million. The year-to-year change was negative 56.22%. Operating expense was way down, minus 132.49%. Net profit margin did go up at 175.69%, and the net income went up 11.91 million. So, going over that, I just want to go over some in-depth stuff. Let's go over their dividend history. So going over their dividend history, they're a high-yield dividend stock. So 2010, 35 cents to 42 cents to 50 cents to 55 cents. 2012 to 57 cents, 2014 to 59 cents, then to 61 cents in 2014. Then you have 47 cents in 2015. It's very stagnant, 47 cents. And then 2020, you get this little dividend right here because blame the pandemic. Then you're at 40 cents to 47 cents, and then you're to 40 cents. So the dividend growth in 5 years is negative 0.33%. Number of dividend increases in the last 5 years is 2. It's 14.24%, and it's 188. So there's pros and cons to this. Pros are there's potential for dividend growth. Don't quote me on that. This is not financial advice for entertainment purposes only. Disclaimer in the description. Cons are sometimes there are dividend cuts. One reason I sold them was because there was a dividend cut, and it's so inconsistent right now. Zacks can't even list the payout ratio. And even PE. Remember, FFO is more important. I even had trouble trying to find the FFO. That's another red flag. That's usually pretty straightforward. So there's a lot of things that are kind of a turnoff right now, but I'm closely watching these guys. Now, if you want to take the risk of this high yield dividend stock and earn high dividend income, go for it. But right now, I'm just going to see how these guys do in a little bit, and if they start increasing their revenue, sure, I'll throw some money in and see what happens with these guys, because there's potential with these guys. So I'm just going to sit back, watch these guys closely. I know a lot of people like this stock for high yield dividend income, but I like dividend hikes. I like Arbor Realty Trust a little bit better as a mortgage-backed real estate investment trust. So that's kind of my thoughts on that, and there's pros. There's a little bit more cons, but again, the pros are high dividend income. They have to pay 90% of what they make back to investors. So let me know what you think of this video. If you are new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This is Dark Dividend. You guys have a good one.